So we will see, look, at the end of the day, number one, we are in a privileged position from the fact that at least there is organic capital creation that is happening in the economy, which is the domestic capital base. It will ebb and flow. There will be months when, organic domestic capital creation is much larger. We have been in a slightly softer patch earlier this year, but the fact remains that the direction of that capital creation has been the same, which is it's been all positive. There have not been any months of redemption, despite we going through significant patches of volatility. To that extent, I would say, look, secondary markets will always be the driver for primary markets. To the extent that we get into periods of extreme volatility or softness in secondary markets, you will see capital raising activities take a breather or a pause for a few weeks, few months, like we saw between, let's call it February to April of this year. But the fact remains that where we are within our economic setup and how capital creation is happening, IPOs are an important part. IPOs as well as capital market activity in general is going to be a very important part in order to take care of these domestic flows coming into the economy. They can either go towards continuing to buy in the secondary market, wherein we will have issue about valuations becoming more expensive, or sterilizing FII outflows, or coming to primary markets. Those are the three places where domestic capital will get consumed. I would argue IPOs as an asset class have given a mid-teens return if you look at IPOs that have happened over the last 1 year. It's not like every IPO has bterm in the green, but short-term to 1 year returns have been in that zip code. For the market as a whole, which has been flattish, I would argue IPOs have done pretty decent returns from that perspective.
Can I bring in, Abhinav, and you touched on this, the valuation mismatch, and are there concerns, especially when it comes to, it's been described as the K-pop issues of the big South Korean companies that have businesses in India, like LG Electronics, Samsung Electronics, India businesses. Those are upcoming IPOs that are being very closely watched by investors. Is there a concern that they could draw liquidity away from the secondary market and create distortions, mispricing, leading to even bigger valuation mismatches and froth in the market?
Look, I wouldn't say taking away liquidity is a question, because at the end of the day, those companies are listing in India. At the end, these are Indian businesses which are listing on the Indian stock exchanges. So it is very much an end-to-end Indian dynamics. Yes, I mean, we've been pretty open in terms of an economy, in terms of allowing capital, as long as it is meeting all the rules and regulations of the country, to move freely across borders. I mean, these are all offer for sales, like Hyundai did last year, or LG India that has filed right now. But from my perspective, I would argue that as long as we continue following the first principles of valuing these companies properly and pricing them well, these trade in India, you will see momentum and interest levels continue to remain high for these being purely Indian domestic businesses out there. The drivers for these businesses are very much Indian in nature.
Understood. Abhinav, NSE IPO, is that likely to be a market-defining event?
Look, whenever it happens, it would be, because it is the largest exchange in the country, one of the largest globally. Like all of us, we are also waiting whenever things happen on that front. But yes, to your question, it will be a market-defining event without a doubt.
Understood. And what are these robust oversubscription rates in the Indian IPO market telling us about qualified institutional buyers and oversubscribing, and the retail investors oversubscribing at an even higher margin?
Yeah. See, that's been the flavor actually right since last year. You'd also notice that invariably the outcomes for IPOs is at the extremes. You will either see subscriptions to be just about crossing the line, or you'll have massively oversubscribed IPOs. That is how the nature of the beast. We'll continue to see that. From my perspective, it just continues to show that the level of interest in the IPO subclass as part of the overall equity asset class continues to remain high. And like I said, if you look at last 1 year returns for the Nifty, it's actually been flattish. If you look at returns for IPOs, and I'm talking about weighted average returns here, which is the right way of really looking at it, those have been in the mid-teens. So investors do see these facts that if you were investing in IPOs and choosing them properly, continuing to hold them for a longer period of time, they will not go up in a straight line. As an equity class, they will not go straight line day 1, day 2, day 3. But over a period of time, if they are delivering a mid-teens return or even closer to 17, 18%, that's not a bad place to be in, especially when secondary markets are flattish.